All right, let's dive deep today. We're going to be looking at Nvidia, the company that's, like basically synonymous with the whole AI boom. We've got this pretty intriguing article from the Motley Fool. It's called CEO Jensen Huang just uttered 8 words that every Nvidia investor should hear. And, there's been this talk going around that Nvidia's dominance in the AI world, might be slipping. But this article says something totally different.
Yeah. It does sound like we're about to uncover some pretty valuable insights here. So what's the context for this, and why are these 8 words so significant?
Well, Nvidia just had a record-breaking quarter. They totally blew past all the analysts' expectations with are you ready for this? $39.3 billion in revenue. And adjusted earnings per share of 89 cents, which is pretty massive, especially when you think about, the whole economic situation right now.
Yeah, those numbers are really impressive. What's driving this remarkable growth?
Well, their data center segment is the real powerhouse here. Think about the chips that are basically essential for AI and cloud computing and all those massive data centers. That's where Nvidia is really shining. This segment alone saw a 93% year-over-year increase in revenue.
Wow, that's a staggering increase. But as with any rapidly growing company, there are, bound to be some challenges. So were there any areas of concern in their financial performance?
Yeah, there was one thing that kind of caught my eye, a slight dip in their gross margin. Now, for anyone who's, not super familiar with this term, gross margin is essentially, it's the profit a company makes on each product after you subtract the cost of making it. So in NVIDIA's case, a lower gross margin means they're making a bit less profit on each chip they sell.
Yeah, that's a good point. It is important to understand these financial nuances. So what's the explanation for this dip in gross margin? Is it a cause for concern?
Well, according to NVIDIA's CFO, Colette Kress, this dip was actually expected. It's mainly due to the rollout of their new AI-focused Blackwell chip. Think of it like, upfront investment costs. You spend a little more now to reap bigger rewards later. They're projecting a rebound in the margin, later this year, bring it back to a healthy level. Plus, their cash reserves and operating cash flow are looking really strong. So financially, they're in a very good position.
Okay, that's reassuring. That makes sense that strategic investments and new product launches can impact short-term margins. But let's get back to those whispers you mentioned earlier about NVIDIA's, potential vulnerability. What sparked those concerns?
Well, there was some buzz about this Chinese startup called DeepSeek. And they managed to create a pretty advanced AI model using older, less expensive GPUs. And some people started to wonder if this could, threaten NVIDIA's dominance, especially in a market where cost is always a factor.
Yeah, that's a valid point. It is important to, analyze potential competitive threats, especially from companies that are, offering alternative solutions. So how did NVIDIA respond to this development?
Well, this is where those 8 words from the CEO come into play. Instead of being worried, Jensen Huang actually sees DeepSeek's approach as a positive sign. He actually believes it reinforces the need for NVIDIA's powerful, high-end chips. His exact words were, future reasoning models can consume much more compute.
That's an interesting perspective. It sounds like he's suggesting that the advancements in AI models, even those using older GPUs, inevitably lead to, a greater demand for processing power, which plays right into NVIDIA's strength.
Exactly. He's basically saying, bring on the AI revolution. Yeah. The more complex it gets, the more our chips will be in demand. So instead of being threatened by these advancements, NVIDIA sees them as fueling their own growth.
Yeah, that's a very strategic way of looking at it, by focusing on, the cutting edge of AI chip technology. They're positioning themselves to benefit from, the increasing complexity of AI models, regardless of, who's developing them. But let's not forget about the practical implications. If these future reasoning models are going to consume more compute, what does that mean for industries beyond just, the tech sector?
That's a great question. And it's one that we're going to explore in more depth later on. But for now, it's important to realize that this trend toward more demanding AI models is going to have ripple effects across, a wide range of fields, from healthcare and finance to climate modeling and even entertainment.
It's fascinating to consider how, this one statement from the CEO can unlock so many insights.
It really does. So we've got NVIDIA exceeding expectations, a CEO who sees competition as validation, and a future where processing power is king. But there's still a lot to uncover here. What do these developments mean for NVIDIA's future projections? And how are they navigating this rapidly evolving landscape? Well, we'll delve into those questions in our next segment, so stay tuned.
You know, that point you just made about like the wider implications of this whole trend is really worth exploring a bit further if future AI models are going to demand so much more computational power. It's not just Nvidia that needs to be prepared, right?
Oh, absolutely. It's going to impact a whole spectrum of industries. Remember those McKinsey projections we talked about earlier? They predicted that generative AI alone could have an economic impact of somewhere between $2.6 trillion and $4.4 trillion.
Right.
That's a huge number.
Yeah.
And it suggests that the demand for processing power is only going to skyrocket.
Right. And it's not just about, raw processing power either. It's about having the right kind of hardware and software infrastructure in place.
But to support these increasingly complex AI models, you're hitting on a crucial point there. It's not just about the chips themselves, but the entire ecosystem that supports them. Things like data centers, cloud computing platforms, and even the algorithms that power these models all need to evolve to keep pace.
Exactly. Let's take climate modeling as an example. As these models become more sophisticated, they need to crunch increasingly vast amounts of data to make accurate predictions.
Yeah, you're right. We're talking about massive data sets related to weather patterns, ocean currents, atmospheric conditions, and countless other factors. More powerful computing would, revolutionize the field, allowing scientists to make more precise predictions and develop more effective strategies for mitigating climate change.
And it's not just about predicting the future, right? It's also about understanding the present in greater detail. Think about something like drug discovery.
Oh, that's a fascinating area. I know AI is already being used to identify potential drug candidates and speed up the whole development process. So how would this trend toward, more complex models impact that?
Well, imagine AI algorithms that can analyze the genetic makeup of individual patients, their medical histories, and even their lifestyle factors to develop highly personalized treatments.
That sounds like something out of a science fiction movie. But it also raises some important questions. If AI becomes this powerful, how do we ensure that it's used ethically and responsibly?
Yeah, that's $1 million question. And it's one that we as a society really need to grapple with. It's crucial to have, open conversations about the potential benefits and risks of advanced AI and to develop frameworks for ensuring that its development and deployment align with our values.
Like we're standing at the edge of a new frontier. There's a sense of wonder and excitement about what's possible, but also like a healthy dose of caution.
Exactly. And this sense of cautious optimism extends to the investment landscape as well. We've talked about, NVIDIA's impressive performance and their strategic positioning. But what about their valuation? Is this a company that investors should be flocking to?
It's a great segue into our next segment where we'll dive deep into NVIDIA's financial outlook and what it means for potential investors. We'll unpack their valuation, explore the risks and opportunities, try to answer the question, is NVIDIA a stock worth betting on? Okay, so we've explored NVIDIA's record-breaking performance and their CEO's, bold vision for the future of AI and the potential impact this technology could have on, various industries. Now let's dive into the question that's probably on every investor's mind. Is NVIDIA stock, worth considering?
Yeah, that's the $1 million question, isn't it? We've seen, their impressive financials, but we need to look at the bigger picture.
Right, exactly. We need to consider their valuation. Now, the Motley Fool article mentions that NVIDIA stock is currently trading at about 28 times its projected earnings for next year.
That does seem a bit high, At first glance, it suggests that investors are already expecting, significant growth from the company. So what justifies this valuation?
Well, the article argues that even at this price, NVIDIA stock is a good deal. For a company with, such a strong growth trajectory. They're projecting both their revenue and earnings per share to jump by over 50% in fiscal year 2026.
Wow, that's an incredible growth rate. If they can deliver on those projections, it would certainly support their current valuation.
And let's not forget, NVIDIA is a dominant force in a market that's, set to explode. Remember McKinsey's projections about the economic impact of generative AI alone? We're talking trillions of dollars.
Being at the forefront of a gold rush, and NVIDIA is providing the essential tools for this whole AI revolution.
Exactly. They're not just riding the wave, they're helping to create it. So if you're looking for a way to, invest in the future of AI, NVIDIA seems like a pretty solid bet.
Yeah, it's certainly compelling. But as with any investment,
Yeah.
there are risks to consider. The tech landscape is constantly evolving, and new competitors could emerge.
You're right. It's crucial to stay informed
Yeah.
about potential challenges, for instance. What if a competitor develops a more,
Yeah.
cost-effective way to deliver the processing power needed for these complex AI models?
Yeah, that's a valid concern. NVIDIA's focus on high-end chips could make them, vulnerable if a more affordable solution gains traction.
Right. It's like any rapidly evolving market, there's always a chance of disruption.
Exactly. But that's why it's so important to do thorough research and consider all angles before making any, investment decision.
Absolutely. And remember, we're scratching the surface here. We encourage everyone to dig deeper, explore those financial reports, and stay informed about industry trends.
Yeah, it all comes back to being an informed investor. Understand the company, the market, and the potential risks and rewards.
Well said. So as we wrap up this deep dive into NVIDIA, what's the key takeaway for our listeners?
I think it's this. NVIDIA is a company that's driving innovation and pushing the boundaries of what's possible with AI. They're in a strong position. But the future of technology is always uncertain. Whether you decide to invest or not, NVIDIA's story is a fascinating one to follow.
I completely agree. It's a story of ambition, strategic vision, and a commitment to pushing the boundaries of technology. And on that note, we'll bring this deep dive to a close.
Thanks for guiding us through this fascinating exploration.
It's been a pleasure, as always. Until next time, keep exploring, keep learning, and keep diving deep.